We've heard the stories about people going out, buying Bitcoin and cryptocurrency, making 10x, 20x, 50x gains, and we sit there scratching our heads thinking, hey, could this happen again? Well, in this video, I'm going to share the potential opportunity we have coming in the next 5 years. We're going to look at cycles and the best time to purchase Bitcoin historically and how that would line up for the next 5 to 8 years. If you are interested, keep watching. Hey guys, my name's Ravi and welcome back to Personal Finance with Ravi Sharma. If you're new here, smash that subscribe button because I talk about real estate, cryptocurrency, and financial freedom. Now it's obvious, if we went back into 2011, 2012, we would love to have bought Bitcoin for less than $10 or $100. But the reality is we are where we are. And rather than being upset by that, we need to use that information and then prepare for what's coming next. Because just like you can buy real estate today for a price that is much higher than what it was 30 years ago, there are still opportunities to make money. If you have the right strategy in line with your risk appetite, you will do really well over the next 10, 15, 20 years. Now, the whole game is financial independence, so you can tell your boss where to go and reap the rewards of the hard work you put in. You want to use a combination of working harder and smarter to be able to get the results and live the 1% life, which is financial freedom. Now, what we're going to do is we're going to look at the last 3 major cycles of 2013, 2017, and 2021 to really understand how these cycles play out, because emotion plays a big part in this. I get caught up in it as well. I got into cryptocurrency at the height of 2018 when the market was absolutely frothy and I got burnt. And that is why I use those lessons, very expensive lessons, to then put me in the best position to be able to take advantage of the next cycle. In 2021, of course, we can all look back and say, I wish I took more profits, but the reality is these cycles, they pretty much play out the same. They just have unique characteristics. So if we're able to learn those things, we're able to prepare ourselves for what happens next and accumulate for the next bull market. Now, what you'll see in the last 3 cycles are 4 things. 1, you'll have accumulation, followed by the upswing, followed by capitulation, and then you see the bear market lows. Now you can break this down at however you like, but I'm going to use these 4 points as an indicator to know where we're headed for the next cycle. What you can see here is the accumulation in 2013, where it relatively flat, moved sideways, and nobody really cares about it. And then we had that massive upswing, which is a parabolic move. And then we reached the peak, followed by capitulation, and then we see the bear market lows in late 2015, about 12 months later from the top. Now this graph here is for 2017-2018 cycle, and the graph looks pretty much similar. And that's because these cycles play out the same way, just with unique characteristics. Maybe it's the level of corrections they have at which point they come back, or it may be a single or double peak cycle. There are unique characteristics, but the whole game is about the same. And here we can see again, in 2015, we start having that accumulation. You move into 2016-17, you have the upswing, followed by the top, and then we have capitulation. And about a year after that, so 12 months, we have the bear market low. Following that is accumulation for the next cycle, but that's what we're going to cover off in this next graph. Now this cycle does look a little different, and that was because there was so many other things happening. You had the pandemic, which meant there was so much more money. You had interest rates around the world going down, and I suspect that due to a lot of these factors, we had a double peak cycle, but it was slightly different. And that is why it looks slightly different to the last 2 cycles. But again, the same sort of things are occurring. What you have in 2019, 2020, the accumulation, you have the upswing go in 2021, and later that year, we see the double peak, the first one being in April, May, then followed by the next one being around November. And after that, we've had capitulation going down into the bear market. Have we seen the bear market lows? And that's the point, is we've seen 3 points already in this cycle, but I think we haven't seen number 4 yet, which would be the bear market low. Now, could you look at these cycles and say, okay, you know what? I'm going to go into the market in this year, sell at the peak, and then be able to time it perfectly? Well, no, because as we've just seen, all 3 cycles have unique characteristics, which is why it's not as easy as just going buy on this day, sell on this day, happy days. I wish it were that easy, but it's definitely not. But what we can do is with this, understand our emotions when we're going through the market, learn from these lessons. I believe we have maybe 1 cycle or 2 cycles left like this, which is why it's very important to watch this video to understand the mechanics of how to accumulate at the right time, rather than buying into the hype, the FOMO that many people got caught into in 2021. Not knowing when to sell is the biggest concern. So that is why, despite knowing these cycles, I continue to dollar cost average a small amount of my portfolio into the market even now. Do I know that the market's going to go lower? Well, possibly, but what happens if it doesn't? Now, if you are interested in getting started, if you haven't bought crypto before, or you've used another exchange, for me, I use Binance Australia, and the reason for that is they have the lowest fees. The fees will start adding up long term, especially if you're buying in the bear market lows. Suddenly 2 or 3% starts adding up because the asset you're buying is significantly lower than where it could be in the next 4 to 5 years. There's a link in the description below for a sign up bonus of up to $100 USD of sign up bonuses. As well as that, I have a video that I'll link up here that shows you a tutorial step by step of how to register your account, how to connect your bank into the account, and then be able to verify and actually purchase. Based on the previous cycles, if we're using it as an indicator, about 12 months after the peak is when we see the bear market lows. In this case, it could be in Q4 of 2022. We're currently in Q3 of 2022, so perhaps only a couple of months before we see final capitulation. The truth is, there are so many things happening on the macro scale that any one of those things could actually be the catalyst to push us down further. The truth is, nobody really knows. And when you zoom out, you look at an asset, keeping in mind your risk and reward appetite, then you need to understand how this could be beneficial to you if you did want to build a portfolio in cryptocurrency. I'm not a financial advisor. I definitely don't look like one. And that's why you need to know and understand that cryptocurrency, just like other assets, are super volatile. With some cryptos even going down by 99% in the last bear market, you need to practice good risk management. So definitely do some due diligence. And again, there are so many scammers in the comments down below. They'll copy all of my content and then ask you to invest with them. I definitely do not ask you to do that. So definitely be aware there are scammers out there. Please avoid them. Practice good risk management. If you guys have enjoyed this video, smash that like button and let me know down below what you think the low of this market will be for Bitcoin. What price and when do you think it's going to happen? I'm very curious. I'll catch you guys in the next one. Thanks, guys.